Hello everybody, and welcome to the first of a 4-video series on how to navigate SIMS, the Student Money Management for St. Bonaventure University's Portfolio Analytics. I am your host, James Tantello. I'm the current head of analytics. I will soon be giving up my position to Nate Parker as I graduate and move on to bigger and better things in life. But first, I thought I'd leave you with some imparting wisdom as to how to really navigate the 4 spreadsheets that I utilize on a daily basis for SIM. So we'll start with the Portfolio Analytics spreadsheet. I'll run through exactly what you'll find in here, what each of these columns means, what all this information is. There's a lot of numbers in the analytics. It's all numbers. And it's all about analyzing the numbers and doing things correctly and making sure things are formatted correctly, are input correctly, are exported correctly, etc. So for everyone who's new to SIM, sit back, enjoy the show, and try to follow along as I explain some of the basics of SIM, the basics of portfolio analytics, and really how to understand the back end of SIM, how I do things, what I output, and why the head of analytics, the position is actually quite important. So I'll start by just explaining what's on the spreadsheet. There's a bunch of tabs at the bottom that we'll get into towards the end. Let me move this. Actually, I'm going to move this up here. Okay, it just wants to sit there. That's fine. So I guess to start things off, the portfolio analytics spreadsheet contains our current portfolio holdings. SIM has been in existence since 2005 when Chris Kinslow, bless his soul, donated the initial investment to SIM. So I think when we go along here, don't try to think of this as 2005. Think of this as 2014. This is where we've come from, but this is more of where we're going. So really what the portfolio analytics spreadsheet entails is our entire history. If I were to go all the way to the end here, well, if I could keep clicking for days, it would run through all the spreadsheets since 2010 when Kevin Miafed started doing this analysis. So I guess where I'm going to start is what's contained in these first 4 sections here. So SIM has a collective number of holdings in different things, whether it's equities, ETFs, fixed income, or cash, and we also have derivatives down here. I'll explain a little bit of the basics of these things, what a sector is, what our sectors are, and some of the things, how things work around SIM. So we'll do a lot of examples. We'll get things going now. So this first column A is a ticker. Now a ticker is obviously what a company's symbol is on the stock market. So when somebody trades something, they're not going to say, I want to trade Bank of America. They say, I want to trade X number of shares of BAC. It's just a way for companies to have a slightly shortened notation, in the stock market. So for example, we own, this is all in alphabetical order as well. So we own, Alcoa, Altria, the list goes on and on. In total, we have 34, I believe, 34 stocks, securities, fixed income, and options that we operate with and that we hold in 10 different sectors. So there's a lot that goes into it, but it's not too hard to understand. So we've got our symbol, our ticker, we have the name of the company, and now column C has the instrument. The instrument is whether it's an equity, an ETF, or an option or cash. So you'll see our first 11 stocks. They're equities. They're stocks. The first 11 securities are stocks. Our 12th one, which is the FlexShares Morningstar Development Market Index, is called an ETF. An ETF is an exchange-traded fund, and it basically tracks an underlying industry, index, or market. And in this case, this ETF tracks developing markets. It tracks the index for developing markets, and so ETFs are really a good way for SIM to diversify globally without actually having to buy individual securities. And down here you see ETF-FI. The FI stands for fixed income. These are our bonds. These are ETFs that cover corporate and government bonds, and I'll get into a little bit that over here in the sector, and also when we get into the next video, which is going to be the diversification spreadsheet. This sector over here, like I said before, we've got 10 different sectors. Ranging from basic materials to consumer staples, technology, financials, energy, utilities, consumer discretionary, healthcare, and industrial. We also have real estate as a sector as well, but we don't currently own any real estate stocks or real estate investment trusts, which are called REITs. And so this is what you're going to see no matter where you go on the spreadsheet, because I've frozen these panes. With an option in Excel, it's freeze panes, and it's really useful in that we can keep it visible while we scroll through the sheet, so we know obviously as we go through, which company is which PE is to which company, which stock price is to which company, etc. So that's another useful option there. And down at the bottom we have subtotals down here as we move through. So remember, as you're going through, down at the bottom you're going to have, and I'll explain a little bit more as we go along, but you're going to have the subtotals of everything that I'm talking about. So now into the next group we'll go into this group of 10 columns. So the SIMS fund is broken up into the long fund is broken up into two accounts: the TD Ameritrade accounts, which is mostly donation, and the Bank of New York account, which is the university's endowment. And so we use two different brokers for that, and so we have to keep records of both sides of any transaction. So we'll buy some shares in one account and other shares in another account, and we'll keep track of it that way. So this first column is the number of shares. That's simply how many shares of stock we bought. This is all historical data, so this isn't what it's currently at. This market value column is its current market value, but that's not based on a purchase price. It's based on a market price, which is over here, but we'll get to that a little bit later. So when we're talking about, we'll just use Altria as an example as we go along. Altria, so we've got a purchase date, we've got a purchase price, we've got the commissions that we've paid, and the number of shares that we used. So for Altria, we bought 25 shares on November 17th, 2009 at a price of $19.27 per share with $5 commissions. So first three things aren't too bad. Commissions, the commissions are a way for our brokers to make money. So how do they make money? They make money per trade. TD Ameritrade charges $9.99 per buy trade, and the Bank of New York charges $20. And this market value obviously is a function of how many shares we own multiplied by our market price, which is over here in column P. Now at any time, if you ever get confused, Excel is a great program, and you can see the contents of any cell based on clicking up on the formula up here, because you'll read that it's E7 times P7, so you'll see that the number of shares times $17.04 gives us our total of $1,141.68, or for Altria, $1,256.50. Now that's just TD Ameritrade. Bank of New York has the same exact features, and we subtotal this all the way at the bottom, add these two together to get our total portfolio value. So as we move along here, we're going to get over to some more interesting things. Why do we have this column in here? You know what, I'll just delete that out. Save us some time. That's not cool. What just happened? Did I miss something? Totally missed something. All right, we'll just leave it in there. The market price. This is what the stock market currently has. This is what a shareholder will pay for the stock now. And these are all dated. So this is the last day we updated it was December 1st, which was a couple days ago. So on December 1st, this is what any shareholder would pay for these securities. These change every day. It's the stock market for you. So these things change, and our market values, these two columns over here, K and F, are going to change every day based on our market price. So this is where we keep track of the market price for all of our securities. We add up the total number of shares here between the two accounts. And then right here in column R, we have the average number of years that we've owned our stocks. And why do I do an average? Well, we take a look at Altria again. In the TD Ameritrade account, we bought it on November 17th, 2009. We bought it in the Bank of New York on May 1st, 2009. So as you see, we didn't buy them both on the same date. Therefore, we can't have one stagnant data number for how many years we owned it. It wouldn't make sense. So I've taken an average of the two purchase dates to give an adjustment for the lapse in time between when we bought it in the different accounts. And that you'll see in our average calculation up here. We've got a couple of comment cells down here in our total shares, what I was talking about earlier, how we add up both shares. This is where we keep track of buying additional shares. So in these two cases, for Gilead and Lockheed Martin, we decided that once we owned it, that we thought our investment thesis was good enough and we wanted to invest more into these companies. So we bought more shares. So in order to not have to make another line on our Excel spreadsheet for the same company and putting in all of this data for another transaction, we just decided to put that all into a comment. So for Gilead, we bought 6 and 12 additional shares, so 6 in the TD Ameritrade account, 12 in Bank of New York, at $104.67 and $108.42 on two respective dates. So these, again, are going to have to go into our average calculation as well. We did the same thing for Lockheed Martin, so those things are noted there. Now, as we move into the more more of the analysis and not just historically and current market data, again, we have our market values. This is basically added from these two columns. So you add column K and column F together, and you'll reach column W. Our cost basis. So when you think about cost basis, think about what you paid for a product. You know, if I'm buying an iPhone and reselling an iPhone, let's say I buy an iPhone for $400 and I sell it for $350. Well, in this case, our cost basis is $400, and the market value, or the price that someone will pay for it now, is $350. That represents a gain of negative 500, or what we would call a loss, which is denoted in red here. So in the same way as buying and selling an iPhone, we buy and sell stocks. So our cost basis includes how many shares that we bought times the price that we paid for them, plus any commissions that we had to pay our brokers to put on those trades for us. Our market value is the total number of shares that we own multiplied by what the shares are currently worth. So if our market value exceeds our cost basis, we have a gain. And if our market value is lower than our cost basis, we have a loss. And that's where we see the green positive numbers and the red negative numbers over here in the gain column. The difference between these two columns is that one is a dollar amount and one's a percentage. So for Altria, again, if we're looking at this row, our cost basis was $1,359.47. Our market value $3,769.50. Get that information right here. You subtract the two to get our gain, so we've gained a pretty princely sum of $2,400 for a $1,400 investment, which is a 177% gain. Those are some really good numbers. What this annualized return column is it's a column that denotes, well, based on our time period of when we bought it, what is our return on an annual basis? And what I mean by that is that we've owned Altria for 5+ years. Your percent gain column is going to talk about our total gain over the course of holding the stock, whereas our annualized return is going to take that total gain and divide it into those 5 years that we've owned it. So it does a good job of putting all of our stocks, no matter when we bought them, on comparable terms. And so this is a good column to see exactly how our portfolio holdings are doing at any one time in terms of earning us money. As to move along here, we have the percent of the portfolio column, which basically takes our market value and divides it into our total portfolio value. And this denotes basically how much of our portfolio is held in any one stock. So for Altria, we own 1.4% of our portfolio. 1.4% of our portfolio is invested in Altria. Our biggest holdings are the iShares Russell Index and the S&P 500 ETF. We also have 18.26% of our portfolio in cash. So those things, cash is not yet invested. So as we move more into the analysis, we understand that this spreadsheet really keeps into account exactly what the PE is, our dividend is, our duration, shares outstanding, market cap, and it also weights all of those things for how much of the portfolio each of our stocks is worth. So for example, we're going to keep going with Altria. PE ratio, which is our price to earnings, that's our current market price divided by our earnings per share. These numbers are all taken from Bloomberg, so if you guys want a good idea of what each of these things are for each company, we update these pretty regularly, so you can come here for that data. Other than that, you won't really need to use this section. This is more to look at our total portfolio, PE, beta, duration, market cap, and our equity and fixed income dividend yields. So, for example, Altria has a PE of 17.54. We weight that for that 1.4% of the portfolio I was talking about before, and you do that for all of our holdings and add it up, and we can see that our portfolio price to earnings, so if someone is 7.04, so if you were analyzing that, you would say if somebody wanted to buy a stake in our portfolio, they would be buying a fund that had a PE of 7.04, which means that $1 of the holding of all the earnings in our portfolio, $1 of all those earnings is worth $7.04, which is actually pretty low. Our portfolio beta, this is the covariance between any security and the market. If you go into your finance classes into the future, you'll hear a lot about covariance in your stats classes, and you'll understand what beta really is. It's a good way to track how much our stocks move with the market. So for instance, Altria, again, it's got a beta of 0.45. This means that for every 1% that the market moves up, our stock will only move up 0.45%. So it's good and it's bad in a sense that when the market goes up a lot, Altria will not move up as much. But when the market goes down, Altria will not move down as much. So it's a pretty safe bet in terms of an investment. And you're likely to see lower betas for consumer staples type equities. So here's another one, automatic data processing. That one has a 0.69 beta. Let me see if I can find one more. General Mills has a 0.75 beta. So you're looking at some of the lower beta stocks that we have in our portfolio. Dividend yield, this basically tracks, what percentage we're getting in dividends from the company. Again, weighted for our portfolio percentages. Duration, this is just for our fixed income, so you're going to see 4 different fixed income ETFs here and what the duration and weighted duration is. Shares outstanding, this is how many shares that a company has that they have out in the marketplace. So it's not how many they've been authorized to sell by the SEC, but it's how many that they've actually sold. Market cap just takes our shares outstanding and multiplies it by our current market price. We weight that as well, and then we have style and size readings over here. This we're going to get into a lot more when we talk about our diversification spreadsheet. So this is basically, the bulk of this spreadsheet. I'll move into a few more tabs to explain kind of what's here and what's there if you're moving into financials or our net asset value, our realized tab, transaction tab, or cash tab. Excuse me. So our daily net asset value is a tab that I created that tracks our net asset value or our total portfolio value over the course of it's been almost 2 years now for any given day. So if I want to know what the stock our portfolio value was on April 19th, 2013, I can go to row 35 and look at our total column and see that, okay, so our portfolio is worth $215,000 on April 19th, 2013. And this tracks through all the way through 2013, 2014, over to where we are today. So here's December 1st. That was the last day this was updated. So November 28th, 2014, our portfolio value was almost $270,000. So over here in these columns, I go all the way back down again. We're looking at the percent change. So from the 26th to the 28th, because Thanksgiving was the 27th and the market isn't open then, how much did our portfolio lose or gain in value? So that's these 3 tabs, and it's broken down by, again, our TD Ameritrade account and our Bank of New York account, and again we have an aggregate total between the two. And then how much value has our portfolio gained since inception? Now inception I'll put in quotation marks just because I'm only reading that starting as the date of documentation, which was February 27th, 2013. So whereas the portfolio started in 2005, when I created this spreadsheet, the last day or the first day that I did that was February 27th. So those are the things that you'll find here. So if you are interested in what our values were, you can just go to this tab, look up the day, and you should get an accurate reading to what our portfolio was worth at that time. Moving over to the financials tab, this is just basically a spreadsheet that tracks the totals for Bank of New York and TD Ameritrade. So for instance, at the end of the month, when I do my analysis, or when Nate does his analysis, we will take the value at the end of the month and put it into this spreadsheet. So here's our fund assets. This is basically our NAV, or our total portfolio value. So at the end of the month of November, the Bank of New York account was worth $178,000. Our TD account was worth $91,000, which is an aggregate total of about $269,400. And we kept track of that for every fiscal year since 2010. Now over here, which I'll get into a little bit later, is realized gains, dividends, and commissions. Commissions we've already talked about. Remember, that's how our brokers make money. So we're tracking how much we spend each month to put on our trades. And then over here, as we keep moving, this just aggregates all of those things. So over the course of Q3 for 2014, which is, our Sims fiscal year is is April 1st to March 31st. So for us, quarter 3 is October, November, and December. So through October and November, we've realized over $7,800 in gains, which is actually quite a lot. And now I'll show you exactly what goes into these three numbers. Here's our realized gains tab. I'll do it for November so you have some information in here. Excuse me. And so we'll start here. This is where we keep track of when we sell securities. So like I said before, unrealized tab is all of our current holdings that haven't been what we call realized or liquidated or sold. So when you realize a gain or a loss, you're selling the product and you have the gain or loss related to the sale based on what the market value was when you sold it. So it's all the same information that we saw in the unrealized tab. And we do our own calculation of what our gain or loss was, and we aggregate that total, and we come over here in the financials tab and put it in for November. So we have a running total for the year of how much realized gains that we have. Now our transaction tab, this is every month. Every time we buy or sell a security, we track it in our transaction tab, and we have a place for it. Each security has a line for each portfolio that it was in. So, you know, we sold Exelon, or we bought Exelon here in both the TDA and Bank of New York account. So we'll have two different lines for those. So when we buy something, just like when you buy something else, you're giving money away. You're not giving it away. You're buying something, so you're getting something in return. But those are decreases to our cash account. When we sell something, we're getting our cash back. And we're getting cash for those things. So we track all of that here. And all of these numbers go over and flow into our cash spreadsheet. This is where we track our dividends. Now, dividends are quarterly payments that some companies choose to give their shareholders for investing in them. So we'll see that for the month of November, we had $237.22 of dividends and $161 in commissions. And those numbers are the numbers that we see over here in financials, 237.22 and 160.174, that we track through each month. Lastly, we'll look at the cash for November. This spreadsheet, or this tab, shows us our beginning value, so how much cash we had at the beginning of the month, and we add and subtract all of our activity through the month, which is all in these columns, and gives us our ending balance, which we total up. And these go into our unrealized tab right here and right here to give us an accurate reading of how much cash we have. And that basically does it for portfolio analytics. So, you know, there's a lot of numbers involved, and there's a lot that goes into it, but when it comes down to it, it's not too complicated. But I hope this video helps in getting you to understand what numbers go in here, how they get in here, how they come out, etc. So we'll see you guys next time.